And hello, everyone. Welcome to another edition of the Calgary Real Estate Show. Mark Newstater and Natalie Newstater with eXp Realty. Jaden Bax with BRX Mortgage. We have
Woohoo!
the logo in this week, so it's official.
Yeah, exactly. Yeah. Very, very excited to be where I am. Very excited to be the backs among the new staters as we do on a weekly basis.
Exactly.
Exactly.
Yeah.
Well, let's get right to it. We're going to recap all of 2023 for you. We're going to get to our weekly stats here in a second. We have the real estate time machine. Jaden's got a mortgage rate update for us. We got some new community events too. So, with that said, let's take a look at our weekly stats. And again, started off the new year and we're changing it up, switching it up. We have all of our segments in our weekly stats now. So some seriously wild swings. I mean, it's crazy, and no wonder, right? The weeks leading into Christmas and then New Year's, and everyone got through New Year's, and it's like, hey, let's sell a house, let's buy a house. So 382 new listings compared to 164 the week before, 136 leading into Christmas, 288 sales. So definitely was not, a huge sales week, but look at the pendings. We'll get to that in a second, but significantly up from the weeks leading into Christmas there. Sale to new listing ratio percentage is 75% only, but look at the pendings. Pendings went up big time. So those people that were out looking were writing offers in between, over this last week here. So right after the New Year's, and that's a huge increase. That's the biggest, largest amount of pendings we've had since the first, second, and third week of December. Days on market 41, and Natalie will get to how that compares to last year, and that's a bit of a shocker. And then our active and pendings still went down this week. So overall, we still went down because we don't actually show our terminateds and our withdrawals on this slide. So that's why sometimes you go, well, why don't the numbers add up? And that certainly can be one of the reasons.
All right. So total sales last year, 178. This year, 277. So it's up 55%. Wow. New listings last year, 383. This year, 518. So it's up 35%. Active listings last year, 2362. This year, 2322. So it's down 1%. Pendings last year, 429. This year, 529. So it's up 23%. And total days on market last year, 51. This year, 41, minus 20%.
Yeah, so big difference there. So a couple things to point out. Total sales being up so high. New listings, obviously, we're getting a ton more new listings coming on this week. But overall, our actives are kind of pretty much at the same place as where we started last year. Jaden, over to you.
Yeah, and I actually don't have a ton to say today, other than I'm just going to point out that for the first time since sometime in 2023, earlier in 2023, we're back below 5% on a 5-year fix. It's great, and honestly, that's a bit of a one-off. There's one lender that's down there. Most everybody else is at about a 5.24 right now, but when one goes, others will follow. I think we've talked about it in the last couple of weeks. Once this spring market starts heating up, that's when the lenders will really start getting a little bit more competitive. And the numbers that Mark just showed us, when you jump from that last week of December into this week in January, there was no reason for them to be competitive a week ago, right? And so they're starting to see the things that make them want to be competitive. So I would expect to see on the fixed side, just where the bond market is and things like that, that's going to continue to go down. A lot of good news for people who are looking for lower rates in 2024. I think that's going to be the trend of 2024, things continuously going down.
All right. I have a question for you, Jaden. I have heard one report this side, the one report that side about when the Bank of Canada is going to start dropping that prime lending rate. What is your opinion?
You just hit me with a loaded, tough question. I think I would like to see it in March. I think that's likely a little bit too early. So I think it's the end of April or early May. I can't remember exactly the timing. That would be the one to me. But I think, all of the numbers in the background, there's a lot of numbers that the media puts out there that the Bank of Canada is showing to you that show that, maybe they can hold on. There's a lot of pain going on behind the scenes. We see it working with clients every day. They're starting to get squeezed a bit more. When I pull credit bureaus, they look a heck of a lot different than they did a year ago. They're really starting to get impacted. So I think and hope March. And I think once it starts, we're going to see a little bit of a snowball effect where things start really heading down in a more meaningful way over 2024.
All right.
Nice. Yeah.
I'll hold you to it.
Yeah,
As we always do.
Yeah.
All right,
There
so
we
we're doing
go.
a quick one this year. Awards for the ugliest architecture around the world. This one, Wonky House in Belgium. I can't.
Well, I got to go
Stone-
back to that for a second. Like,
It looks like a bin that fell over.
Yeah, exactly. That is crazy.
Yeah. The Stone House in Portugal. This is an actual new build, which is hilarious to me, but whatever. Somebody's got more money than time. The Quirky House in New Jersey. That looks like a house in New Jersey.
I was just gonna say that doesn't look at all like the Sopranos house, but I
No.
can see that in New Jersey.
Exactly. The Mr. Toilet House in South Korea. I can't even. Oh my word. Okay. And last one, the Sanzai UFO houses in Taiwan. There you go. Those are all probably different units or something. I don't know.
Yeah, that's actually pretty cool. I can stomach that, but I mean the toilet house, I don't know.
With all the flags of the world on top of it, I love that.
I just think, like, did he make his fortune in toilets? Like, is that where's
I don't know. It's actually called the Mr. Toilet House.
Oh my
it's in just outside of Seoul. It's like, all right.
Man, that is awesome.
Yeah. Anyway, that's all I got this week.
All right, so I'm going to do the recap a little bit differently. I wanted to post some of the comments from our chief economist, Anne-Marie Lurie, and I'll kind of paraphrase on these slides here. But essentially, sales were down significantly year over year. So that's not a huge shock, but still, we're still higher than a lot of different markets in terms of the sales decrease. Notable shift towards more affordable options. And you're going to see that big time when we get to the actual stats. And, for sure, higher lending rates dampened housing demand. But we had that huge migration, which we've been talking about all year. So our demand was still relatively strong, especially for those affordable options. Supply levels low compared to the demand throughout the year, resulting in stronger than expected price growth. So we'll get to the pricing in a second, but we were up where a lot of markets were down. Inventory persistently below long-term trends, a 44% decline over the 10-year average. Months of supply remain well below 2 months. And that's a really big stat because that really is an indicator, as I've said many times, of where we're at in the market: buyer's market, seller's market, balanced market. It's one of these stats that they use. So being well below 2 months, that's still generally speaking a seller's market. And, persistently tight conditions. Again, less than 2 months of supply contributed to city's new record high price. It did slow, though, the pricing from 2022, 6% growth in 2023. If you had investments that did 6%, I'd be okay with that in a market like we've had. And again, that's compared to some of the other markets around the country. So when we get to the actual stats here, and this is the new format that I'm using, so I'll just highlight a few things. Feel free to pause this, on your phone, on YouTube, if you're watching this on your TV. But this will be a good indicator for you of where things are at for your particular segment that you own, right? So on the detached side of things, sales were down 19%, but new listings were down 23%. Inventory overall was down 27%. So we had 72% of new listings that were selling. Months of supply, though, only 1.39. That was down 10%. And our pricing overall, and again, if you watched us last week, this number is lower. All these numbers are lower than last week's numbers for our benchmark prices, because this is the average of the benchmark prices for the whole year. But overall, we went up 8% to 675, 783 on the detached side. Semi-detached sales only down 10%. New listings 17% down. Inventory overall down 26%. 82% sales to new listing ratio. So 82% of new listings were selling. Very similar months of supply, which was down almost 18%. And then the price overall for the year went up 7% to 604,933. Row townhouses, 11% down in sales, 15% down in new listings. Inventory, look at that, 36% down.
Wow.
88% of new listings were selling, less than a month of supply overall for the whole year. And that was almost 30% down compared to 2022. And that's why you had such a significant price increase there on row townhouses, just because of the lack of supply, right? Supply and demand. 14% up to 399,048. And then finally, I think this is the story of the year, really, is apartment condos. 27% up in sales. So my presentation last night at our business networking group, and what I've been talking about recently is, if you bought, we're actually doing a YouTube video coming up here on how to sell your condo in Calgary, top 4 tips or whatever. And if you bought in 2020, the prices have gone up 31% since 2020. Just 19% from last year. That was December to December. So overall for the year, up 13%. But let's run through the stats here. 27% up in sales, 18% up in new listings, 20% down overall for inventory, 81% sales to new listing ratio, 1.47%, 1.47 months of supply, and that's down 37% from last year. And that's based on the average supply and how long it would take to sell that if there were no more new listings. And then the price went up 13% overall for the year. So if you're an investor and you're like, I'm kind of tired of being a landlord, or I would prefer to move up to a row townhouse or something like that, like, shoot us a message, right? This is a great time, and still is a great time, to sell an apartment condo. You can leverage that, take that equity you've gained since when maybe you bought it in 18 or 19 or 20, and that's a lot of equity you've gained, and flip that into something else. So totals along the bottom, I'm not going to spend a whole lot of time there. But, realistically, what are we looking at for this year? I mean, if you look at those weekly numbers, and that's why we track weekly numbers, we like seeing trends. And if you look at the trends, we're seeing a lot of new listings hit the market, but we're also seeing a ton of sales, a ton of pendings, and our days on market is significantly lower than it was last year at this time. So overall, I think, somebody posted a video yesterday. I'm curious to get everyone's thoughts here, but if you're upsizing, you probably want to do it sooner than later, because let's say, pricing goes up. Let's use 10% as a number, and you're selling a $500,000 house and you want to upgrade into an $800,000 house. Well, all of a sudden that $800,000 house, maybe at the end of the year, is $880,000. And now that's out of your budget range, right? Whereas it's in your budget range now. And there's a lot of different scenarios that we can work for you to see how the numbers go. But Natalie, thoughts? Jaden, what do you think?
The numbers are crazy. And I agree with you about, upsizing at this point in time, that it's a good time to do it, getting into the market. So yeah, I don't know. Yeah.
And if you're downsizing, like from a mortgage perspective, you may want to wait, because who knows if the prices continue. But it's all lifestyle related.
Yeah, exactly.
Right? Jaden, what do you think?
Yeah, and it's, the mortgages shouldn't be a big deterrent to you. The only thing that I'll say is that as rates go down, we're likely going to see people having their pre-approval amounts go up slightly. So,
right.
There will be a little bit more accessibility there. I wouldn't necessarily wait for that, because like Mark says, if we continue this trend of huge migration to Calgary, everybody wants to live here, even in minus 35 or whatever the heck it is. That little bit that you're able to afford more, maybe 6 months from now, because rates have gone down, likely offset by gains in pricing in the housing market, right? So, you got to make the decision with the information that you have now. Can't really rely on what's going to happen 6, 8, 12 months from now, right?
Yeah, and I think, like we always say too, and we'll wrap it up here, but what is your situation now? What life change has happened to you that you're even considering making a move, right? And that life change is the decider for most people, and they'll deal with you marry the house and date the rate, as we always say, and we know that potentially rates are coming down. So anyway, that kind of wraps it up for today, guys.
Awesome.
Okay, well, we'll see y'all next week.
Stay warm, everybody. Wear woolies. Wear what you need to. Don't go outside if you don't have to. I'm going out to shovel now, so I will return a little chillier than I started. We'll see you all in 7 days.